Good afternoon, everyone. Welcome back to PBA at Noon. I'm Sophie Caesar, and I'm not joined by my colleague Paul Benwell today. Paul is social distancing on his annual golf tournament and will be back next time. Today we have joining us Ken Berry, CEO of Northern Vertex Mining Corp, which trades on the TSX.V under the symbol NEE. Northern Vertex has already made the transition from exploration to production. Its focus is on low-cost gold and silver production, including further exploration in the U.S. at its 100% owned Moss Mine, located in Northwest Arizona. Northern Vertex corporate goal is to become a mid-tier gold producer with over 200,000 ounces of gold production annually. Ken, thank you for joining us today.
Sophie, thanks for having me on.
So please feel free to start, and we'll take questions once you are finished your presentation.
Okay, Sophie, I'll just try to get my presentation up on screen here. Give me a moment. Great, how's that, Sophie?
It looks great.
Okay. With that, we'll start from the beginning. Thank you very much for having me on, Sophie. My name's Ken Berry. I'm CEO of Northern Vertex. And we have the Moss Mine, which is located in Northwest Arizona. This first slide just gives you a little indication of one of our haul trucks in the forefront and our crushing system in the far reaches of this slide. We are located in Northwest Arizona. We're about an hour and a half south of Las Vegas and just 3.5 hours west of Phoenix. So fabulous location for a mine. We're 10 minutes outside of the town of Bullhead City. So our 150 men and women that are working on site on a daily basis are able to travel to and from home to work and live at home with their families. We don't have to carry a tremendous amount of inventory or have a remote mining camp. So we've been able to keep our costs contained. And I'll just walk through a few of the slides, and then perhaps following those, we can get on to some questions if you'd like. So our first slide here. Okay, just give me a moment. We'll see if we can navigate through this. There we go. Okay, this is just your standard forward-looking statement, and I'll leave that for your viewers to peruse on their own, and you can visit our website to see more information on the company as well in these forward-looking statements. So some of the investment highlights of Northern Vertex, we like to key in on 4 areas that we feel are transformational. And the first is we've been increasing profitable production quarter over quarter. Our last quarter ending June 30th was very successful. We had over 11,365 gold equivalent ounces. We are primarily a gold producer, but we also have a silver component. So 90% of our value is within the gold, 10% the silver. We also had cash costs in around $860. So we expect to have cash costs moving forward here between about $860 and $950 for the next year. We're implementing a number of cost-saving measures, and we'll see that cash cost start to lower as we move forward. We've also started an exploration drill program to expand the resource and extend the mine life, and this is a district-scale exploration program. It's been underway for a couple months now. We've had some tremendous results, and I'll talk about those later in the presentation. But we are very excited about our initial results, and we expect to have results on exploration coming to the marketplace between now and October, November. So we've also been strengthening our balance sheet by deploying our free cash flow to reduce debt. We're also investing in some transformational investments, long-term investments, such as power line to the site that will replace 8 generators that are burning about 10,000 gallons of diesel a day. We're moving to a larger crush size following some initial testing here. And in addition, being a U.S. producer, we are definitely in the limelight, and we have opportunities for M&A and consolidation. We expect to see activities within the gold sector in the U.S. Being such a great jurisdiction to be operating in. This just shows you our capital structure. What you'll notice here, key takeaways are we have very strong relationships and strategic investors. We've got Greenstone Capital out of the UK. They represent 18 endowment funds out of the US. We also have Maverix Metals as a key shareholder. They also have a silver stream on the project. And we have high net worth individuals out of Europe, primarily Switzerland, who are holding a large block. We have 250 million shares outstanding, options of about 13 million shares, warrants of 93 million. We have traded between 15 cents and 60 cents during the last year. We're currently in around the 50-cent level. As of the end of June, we had 6.8 million in cash, and that's been growing monthly, as mentioned. So we're looking forward to a strong quarter ending June 30th. And this just gives you a little bit of an indication of our experienced management team and board of directors. What you'll notice here is that we've got a team that has access to capital, is strong in exploration, is proven in mine building and operations. We've got individuals such as Jeff Burns, who is one of our directors, and he's the chairman of Maverix Metals, was also formerly the CEO of Pan American. We also have Jim McDonald on our board. Jim was one of the founders of Alamos Gold and sat on their board for a 10-year period and was also part of their technical committee. We have Dave Farrell on our board. He worked 10 years with Endeavor Financial, with Frank Justra doing M&A activities. And we have Mike Haworth on our board of directors. He was one of the head of metals and mining for JP Morgan out of the UK. In addition, we brought on Dave Splett as our CFO. He was formerly CFO for Latin America with Goldcorp. He was also with Mosaic and Teck. I'm a former investment advisor. I am one of the founders of Kootenay Silver, remain on the board of Kootenay, and also a founder of Northern Vertex. So we acquired the Moss property back in 2011 and have taken it right from exploration through to production. So we'll touch on a few more items there. This gives you further background on our directors and management. I'll leave this for your viewers to maybe visit our website and see a few of the individuals. In addition to the ones mentioned, we have Tiziano Romagnoli. He was formerly head of BMO in Geneva. He's been instrumental in our financings out of Europe. And we also have Joel Murphy. He's our GM down on site, and he formerly ran the Florida Canyon project, which was one of the lowest cost producers in all of Nevada. Here you see some of the records we set ending June, and we had revenue of 18.2 million. We produced 11,365 ounces gold equivalent, 10,530 ounces gold. We had days where we had 167 ounces in a single day. Now in July, we topped that. We had days of 180 ounces plus. And we also, as I mentioned, finished the quarter with 6.8 million in the treasury, and that is growing week over week. So this talks about our production and cash flow and how it's been increasing. What you will see here primarily is our cash cost at $862, all-in sustaining of $1,077. So moving forward, we have many optimization measures coming online. So we expect those costs to be coming down. We have the power line. We're moving to a larger crush size. We also have an ILS system, which is a solution management system. And then we've been looking at our pit operations, and we have a new contractor coming on board here in the next couple of months, and we expect those costs, ex-pit costs, to be reducing as well. Here we talk about our maximizing shareholder value and just some of the building blocks that we have in place and that we're putting in place. So we've talked a little bit about the exploration program underway. We expect that this will be adding ounces to our mine life, and we'll be optimizing our life of mine moving forward. We're also expected to reduce the ex-pit costs per ton with the power line, the larger crush size, the solution management plan. And this just results in a lower cash costs and lower all-in sustaining costs as we move forward. So this mine is really hitting its stride after a couple of years of production. We're very pleased with our progress to date. This is another location map. It shows you the area that we're located in. This is the Walker Lane Gold Trend, and this extends right up into northern Nevada. And the lower end of this trend is in northwest Arizona. We are in the Oatman district. This Oatman district produced over 2 million ounces of gold historically. We are the largest open pit operation, gold silver operation within Arizona. So we're very pleased with that. And we expect further discoveries as we explore this Oatman district and our large land claim package of about 10,000 acres. This next slide talks about the resource. And here you'll see we're just under 500,000 ounces of gold and about 5.8 million ounces of silver. We expect this resource to grow. You see a 3D modeling in front of you here, and it shows our pit, which will expand to about 1.5 kilometers on surface. It's open to the west, open to the east, and at depth. And we have other targets that we'll be exploring that are up to 1.5 kilometers and 2 kilometers away from the mining pit, which we're currently operating in. We like to show this slide because it's very representative of the opportunity within the district. So this land package that we have, it covers about 10,000 acres. You see the infrastructure in the center of the screen. That is, we've invested more than 60 million into our crushers, heap leach, and various infrastructure that is in place. We're currently mining that Moss open pit to the top of your screen, but we're also testing with the exploration program that's underway. We've stepped out to the west extension. We drilled some holes there. We've stepped to the east. We've also gone down to the West Oatman trend, which is to the south of our mining operations, about 1.5 kilometers. We're getting excellent results from these programs. In addition, we have the Ruth vein, which is running parallel to the Moss structure. And this is just 500 feet south of our open pit operations right now. And in this Ruth vein, we've been successful at hitting some very high grade numbers. So we've had 716 ounces of silver over 1.5 meters. We've also had over 2 ounces of gold over 1.5 meters. And now this is a little bit broader within a hole of 21 grams over 6 meters. So very successful initial step out to this Ruth. And so we're pleased to be seeing some higher grade hits here. And we expect that to fall into the pit as we expand operations. Here you see one of our 2 active drill rigs on site. So this is a multi-phase program that's underway. As we mentioned, we're testing some of those high-grade targets. We're also expanding in and around the pit. So this current rig is sitting right at the Gold Bridge zone, and that's between the central pit and the west pit. And what we're seeing now is mineralization within this Gold Bridge zone. We expect that to connect up the west and the central pit. It'll be one large pit that'll run about 1.5 kilometers on surface. This is another 3D modeling of our resource, and you see the targets which we're currently testing. So you see right in the center of the page is the Ruth vein. That's a high-grade target that we're testing. We're putting fences across that. We expect this to give us more information on this parallel structure to the Moss area that we're mining currently. We've also stepped out, as mentioned, to the west 1.5 kilometers. We've looked to the east, and we've gone to the south as well. So really, we've achieved 3 key objectives in this initial drill program. We've hit some high-grade holes within that Ruth vein. We've stepped out 1.5 kilometers. We're revealing that we have ore grade material out to the west, which runs on strike to our operation. So we now have about a 5.6 kilometer strike length, and that's within the 1.5 kilometers, or we have that 1.5 kilometer pit within that 5.6 kilometer strike length. So pretty excited about that. Here you see a cross section of the Moss vein on the right-hand side of the screen. And we have that high-grade Ruth vein on the left-hand side. So we're looking to connect these 2 structures, the Moss, which dips to the south, the Ruth dips to the north, and then you have the stockwork system in the middle. This was previously thought to be waste material. We're actually finding out that it's mid-grade to lower-grade material. So that's also going to add some ounces here as we do our exploration and then come up with a resource calculation following that. If you visit our website, you'll see some of these 3D modeling pictures. It's a verified program that walks you through the different areas of the mine site. On the far right-hand side, you'll see our pit activities. Just left of that is our crushing facility. In the center of the screen, you have our heap leach pad, and then you have the ponds and the Merrill Crowe facility on the left. And I encourage you to go to our website and surf around a little bit there, and you'll see just how active we are. As mentioned, we have 150 men and women working on site on a daily basis. This next slide shows you our resource growth. So the top portion of this slide talks about the resource growth. The lower portion is our cumulative production quarter over quarter. What you'll notice here is in Q1 of 2020, we did a 14,000 foot drill program, and that was last September to about November. We drilled 14,000 feet. We added over 120,000 ounces to our global resource. We're currently in the 60,000 foot drill program, and this is expected to be completed in about October, November, and then we'll look to do a resource calculation following that. So just to summarize our growth strategy, we're maximizing our free cash flow. We've got the 3/8, the larger crush size, which will be coming on stream. We're driving down those operational costs with the power line and the solution management system. We've also got the exploration program underway with a goal of doubling the size of our resource, and we're targeting some of these high-grade hits such as the Ruth vein. We're also strengthening our balance sheet. We're paying down debt. We paid off Sprott in July, just last month. We also are paying down our 8.5 million Greenstone convertible debenture. That's expected to be retired by December or earlier. So our balance sheet has definitely gone through a restructuring. It's getting to be very clean. We expect over the 12-month period ending December to have paid down about 12 million in debt and payments. So we're quite happy about the progress we've made there. And we're also in a position, being in an excellent jurisdiction, being located in Northwest Arizona. We feel that we're ideally positioned for consolidation within the U.S. marketplace. And the exploration upside that's underway now is adding some excitement to the story and has really given us the ability to increase the potential resource, the global resource that's sitting right now at just under 500,000 ounces. So with that, Sophie, I'd just like to thank your viewers and open it up for any questions.
Great. We have quite a few questions this afternoon. One is regarding your investment banking history and the caliber of investors that you do have. Do you see yourself as driving the acquisitions coming forward in the future?
We definitely believe that we've got a platform for growth. Now, we've talked about some of our investors and strategic investors. So just to give you an example of our ability in the marketplace, we acquired the Moss property in 2011. And since that time, between 2011 and 2015, we were successful at raising about 50 million for the company and its development. And that took us through the exploration phase and right into test mining facility, feasibility study. And then we were able to attract Sprott lending initially with a $20 million facility. And then we brought on, following the Sprott $20 million facility, we brought on Greenstone Resources for another 30 million plus. So we definitely have the ability to raise funds. To date, it's been all non-brokered financings, but you can imagine now we're starting to step out. We're getting interest from the marketplace. And with our various directors and management, we have that experience, and I'll just name a few. We've got a fellow like Dave Farrell, who was instrumental in the M&A activities for Endeavor, did in the billions of dollars of transactions. So we definitely believe that we have a platform for growth now that we have achieved this profitable production. We're expecting to throw off significant cash flow between now and, moving into the future.
Excellent. Speaking about some of your strategic investors, there's a question here about Greenstone and will they convert the debenture or not?
Greenstone has a $8.5 million debenture, and that was put in place. They had initially taken an equity interest in the company, and they currently hold about 31%. During that startup phase, we ended up hitting some speed bumps, and this isn't uncommon in new producing situations where you're commissioning a mine site. Most of these new mines take 1.5 to 2 years to really hit their stride. We were no different. As we hit some speed bumps, Greenstone was very supportive, came in with an $8.5 million debenture that's convertible at 30 cents. So we're currently trading at around 50 cents. So there's a high likelihood that you will see either they convert or we'll pay them down in the future here. But as I mentioned, they're a very strong supporter, and they represent 18 endowment funds in the US. And these endowment funds are groups such as Duke University, Mayo Clinic, Ford Foundation. So very strong supportive shareholders.
Good partners to have. We have here, great presentation. What is, and I know you touched on this, but what is your total debt and what is your burn rate?
Okay, we currently, as mentioned, you can, I'll leave the numbers, specific numbers for the viewers to calculate, but last quarter we did 11,000 plus ounces gold equivalent. We expect to have an equally strong quarter ending September. We currently have 150 employees, men and women on site, and we are throwing off significant cash flow. As an example, as we ended the June quarter, we had 6.8 million in the treasury, and that's been climbing on a weekly basis, especially when we're seeing gold prices $1,900 plus. We've had many of our gold sales north of $1,900, and so things are moving in our favor now.
Okay, and I'm sorry, so what exactly, I think it was in your presentation, but what exactly, where do you stand as far as the debt is concerned?
With the debt, we currently have the $8.5 million, and I'll slide down, oops. We have the Greenstone $8.5 million debt. We also have a Swiss debenture, which we've extended for 5 years. That's a low interest rate of about 5%. These are very supportive shareholders of ours. In addition, we have a $3 million 15-year 1.6% interest rate loan from the US government to put in the power line to replace those diesel generators. As I mentioned, the diesel generators burn about 10,000 gallons a day. So this was a program that was put in place to encourage being environmentally friendly, and we were able to secure that $3 million loan at 1.6% interest for 15 years, and that's a significant savings to the company. We believe that's going to be a savings of somewhere in 15 to 20 million over the life of the mine. So we have the Greenstone debt, the Swiss 5 million, the 1.6% government loan, and then we have some cap financing, which will be down by the end of the year. It'll be down somewhere in the $2 million, $3 million range, and that's on our crushing facilities and various loaders equipment.
Actually, and you mentioned the cost savings over the life of the mine. What is the life of the mine now, and what do you expect it to be after the drilling?
Well, those are quite forward-looking questions. So what I will say is that we currently have a global resource of about just under 500,000 ounces. We did a program a year ago of 14,000 feet. We added 120,000 ounces to the resource. We're currently in the process of drilling a program that's going to be about 50 to 60,000 feet, and following that, we will look to do a resource calculation. We generally are looking at our global resource and mine life somewhere in around 8 to 10 years is what we're expecting, but we're very optimistic that we're going to add to that resource. And you know, we've shown a few of the slides. Here you see the operations and the pit with that moss structure. So it runs for 1.5 kilometers. The entire global resource is within that mining pit, but we have stepped out to the west on this 5.6 kilometer structure. The moss pit will be 1.5 kilometers currently as it's mapped out. but we expect to be adding ounces with the Ruth vein out to the west. We're also going to the south, to the West Oatman. So, our goal is to double the resource. Where will it be? I think a good indication of what we believe the mine life will be is a group like Mavericks that invested in us, and we're one of their larger cash flowing assets within their streaming portfolio. They looked at the Moss project. They expect that there will be lots of exploration upside to this and be producing for years to come. So really the upside is yet to be discovered, and that drilling program that's underway, it will be very interesting to see how the results roll out, and I would expect that it will encourage us to do more work.
And so with expansion obviously comes more permitting. Where do you stand on that, and how is the jurisdiction in terms of permitting?
Sure, that's a good question. You'll see on this slide, you'll see that arrowhead in the middle of the screen there. That is private patented land. And this was the initial permitting that we had received, was to operate a mining project on that private patented land. Last March of this year, in the spring, we received our BLM permits to step out onto the greater land package, onto the federal land package surrounding that private patented land boundary. And that permit was a process that took us about 3 years all up. We received permits to step out with the mining operation. As soon as we received them in March, we started to step out with our waste dump. We can also step out to the west of the private patented land with an additional leach pad, and we were permitted to explore these various targets. So what you'll find when you develop a mine is that you receive these permits in hand for your private patented land, state permits, federal permits, air quality permits, and so on. You receive those, and as you discover new ounces and you start to expand the mine life, there's constant permitting amendments that you'll be applying for. So it's not uncommon. So I would expect that as we discover more ounces and we start to branch out, that we will continue to file amendments for years to come in the development of this project.
Excellent. A common question we get these days, how has COVID impacted your project, and were there any expenses that were incurred? Were you guys able to just keep producing, or was there a stop in production?
That's another good question. So I think we were well ahead of this COVID sort of protective measures that went in place. And I was at the PDAC conference in March. I flew down from Toronto to Las Vegas, went on site with some shareholders, and we were promptly reminded that COVID was certainly close to home, because there was some of our visitors, not some of them, one of our visitors in particular had come down with the virus. That prompted us to put a number of measures in place immediately. We were very fortunate. No one on site was exposed, myself included, and others. Nobody came down with any viruses. We implemented testing programs, taking temperatures daily, signing off release forms to notify us if anyone's been close to a relative or a friend or an area. So this goes on a daily basis. We've also divided up our teams on site in various trailers, and we've divided up the transport to and from the site. So yeah, we were ahead of the curve, I believe, on this, and we have not suffered any shutdowns, and we've been vigilant on that. We hold our Zoom calls and go-to meetings, and as I say, we're very fortunate, knock on wood, that we have not suffered any shutdowns like many other mining companies.
Well, Ken, it seems like you got ahead of that one right in time. That's excellent. So I guess I'm just going to take a look and see if we have any more questions. We have one here. What is your revenue per share, if you know that?
Well, currently, and you know, I think this quarter that we have coming up is going to be very interesting. June 30th, we did give our production numbers. We didn't put out earnings per share as of yet. What you'll see is the financial metrics for the quarter ending June 30th will come likely in the first week or two of September. So currently we have put out our production numbers, and that was the record numbers that we put out, the $18.2 million. So we have not put out an earnings per share as of yet.
Okay, excellent. I think we've gone through most of the questions, everything else you covered in your presentation. So Ken, I'd like to thank you very much for joining us today, and best of luck, and we'll definitely be watching for those numbers coming out in early September.
That's great, Sophie. Thank you very much for having us on. And as I mentioned, we've started to hit our stride. So we definitely are expecting to have a significant amount of free cash flow. Our focus currently is to pay down that debt and to make sure that we put these long life lead items such as the power line and the increased crush size in place, and that'll drop our all-in sustaining costs and cash costs, and I believe it will result in some of those numbers that your viewers are looking forward to seeing here.
Excellent. Great. Well, thank you very much.
Thank you, Sophie.